Hey guys, so here's a quick video on what's happening in the economy. Are we good? Are we bad? Is the result much better than what people expected? Check this video out. This is again our update on what's happening based on the GDP. By the way, the market is up right now. It's 8,059, close to midday, and which in some aspects and some regard, no, what happens in the macro defines how large funds invest in our country. Because at the end of the day, we are still dominated by foreign funds. If foreign funds love what's happening here, they're the ones who pour in money. So following the GDP is a technique, it's a style for those who have not, for if you want to know the direction of the economy, it serves as a validation also of the economy as a whole. It serves as a narrative on how are you supposed to position your stocks, not just now, not just for the short term, but also for the mid and for the long term. And if the growth of the stock market is valid or not, please remember, if the market continues to go up and the GDP is not following, that's a good example of a bubble. So we have to see, we have to filter out, are we about to become a bubble or are we doing good that there's, I guess, nothing to be scared of yet as of this point in time. So let's break everything down. Number one, it was projected that the GDP for 2018 would be around 7% up, which a lot of people said that it was optimistic. But what people did not figure out, what they did not factor in into all of this was 6% GDP, 7% GDP. They did not factor in the train law, high oil, and the increasing US dollar up against the peso, meaning that made inflation go higher. As inflation went up, as inflation was relatively higher, that's what slowed down our GDP, and it slowed down the projection of where we could have been over the past year. So 7% projection, we closed the year at 6.2%. Not at all bad. It's just lower than what was projected. It was just lower than what was expected. But 6.2% is still a very, 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 very good GDP result for 2018. Now, here's what's exciting about 2019. I've been saying this in several videos that I've created in the past that 2019 is election year. Hence, there's always a spike in the GDP. That 2019 will be better than 2018. Number two, we have SEA Games, meaning there will be a lot of spending that will happen during the SEA Games period. There will be a lot of not just construction, but the entire event, the entire days leading to the event will entail a lot of spending. Plus, inflation is expected to be lower. Not just inflation's lower, the dollar has stabilized. Not just that the dollar has also started to stabilize, you have oil getting lower, and the expectation of people wanting to spend more will be much, 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 much bigger and stronger for 2019 as a whole. And you have all of the projects that the government projected in 2016 to finally happen this 2019. So all of the projects in build will happen in 2019. So what am I expecting? I'm actually expecting that the GDP will be much, much better this year. Plus you have to factor in lower base, better output. 2019 will be better. And all of the things that I love about our economy are still there. BPOs, it might not be as fast in terms of growth rate as what it was before, but it's still amazing, it's still good, it's still gonna crush it. It's one. Number two, remittances are still very, 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 very high. So it's not something that you should be scared of. It's something that you should be excited about. And for those doing businesses, now is still one of the best times for you to actually start, to actually do it, because we are in one of the greatest ways for money to be created in our economy. So remove all of the politics. Just do what you need to do. And that's how money can be made. So all in all, 6.2 is very high. Number one. 6.2 is still faster than everything else in our region. Number three, aside from it being faster, it's not what people were expecting, but we're now, I guess, in a way, not dreaming so much and trying to put targets that are hard to achieve. But as validated by the market, we're not seeing contraction. We're not seeing our GDP slowing down. We're not seeing negative GDP. So this gives an additional punch, an additional fuel to what's happening in our markets as a whole. So, ayun, that's it. I'll give you an update naman. Comment below on stocks that you want me to analyze as I do stocks by request in the next few videos, both for YouTube and Facebook. I'll be doing it there. And then if you have any specific questions, put your question below and your number, and I'll call you and we'll do a Q&A session together as well. So that's it. 6.2% GDP. Not as, at least we're out of the woods, no? Sa all the, alam mo yun, at some point last year, a lot of people were fearful about what could possibly happen in the economy. Now we're at least better. We're in a better, I guess we're in a better predicament than where we were before. So, there. I'll be in Qatar next week. So, you guys in Qatar, see you all there. I'll also be with Sean C this February 13th. So I hope this video helps you trade well, trade strong, trade smart. This is still one of the greatest days to invest and do business, and it's one of the greatest days to be alive. So see you all again soon, guys, and bye-bye.